Mean reversion represents one of the most fundamental concepts in trading, and it's just rooted in the principle that prices will eventually return to an average state. So just think of a rubber band, you stretch it too far, it snaps back. So that means when an asset deviates significantly from a historical average price, they tend to correct themselves. So this is how it would work in practice. So you have a stock trading at $100. And let's say historically the average is $90. But all of a sudden news comes in and the stock spikes up to $120. Well, mean reversion theory suggests that it's going to likely retreat back to around the $90 level. This pattern occurs across all time frames, all markets, from forex to commodities, it doesn't matter. And we can use technical indicators to spot when reversion to the mean has a high probability of happening. Let's look at Bollinger Bands, just a 20-period moving average with upper and lower bands 2 standard deviations away. And these help identify extreme price movements. So when price touches the upper band, you're potentially looking at overextended prices. When it touches the lower band, they're potentially oversold. So the RSI, that gives you another perspective. When it exceeds 70, it suggests overbought conditions, a potential short opportunity. On the flip side of that, an RSI below 30 indicates oversold, so it's a potential buying opportunity. So if you see a stock and the RSI is sitting above 70, maybe it's 75, 80, 90, after a strong rally, well, historical patterns suggest that a pullback is likely. But like everything in trading, right? It's not a guarantee. Prices can stay overbought or oversold longer than you think they can. So you don't want to keep on trying to enter trades. And this is why pattern recognition plays an important role. Double tops, double bottoms, triple tops, triple bottoms. This is where prices attempt to break a resistance or support level and fail. And this will often precede a significant reversion. Look at Bitcoin's price action in late mid-2024. It's around the $55,000 level. Prices tried to go lower and it failed. And then it rocketed to new highs. But we have to address risk management. And this is the cornerstone of successful trading in general, but especially mean reversion trading. You want to set a strict stop loss. And you're looking about 1 to 2% above resistance for shorts or below support for longs. Make sure you size your positions appropriately. You don't want to risk more than 1 to 2 of your trading capital per trade. That's a rule of thumb, but more experienced traders will eventually risk more. Use a time stop. If you're in a trade and the reversion is not really happening within a predetermined time frame, maybe 2, 3, 4 days, get out of the position. We want to see almost immediate rejection. So for a practical application, here's just a simple strategy to look at. You just want to identify an asset that shows extreme RSI readings. Look at readings above 75 or below 25. Don't just stick with the 70 level. Confirm the setup with a Bollinger Band touch, high or low, doesn't matter. Look for reversal candlestick patterns, hammers, shooting stars, double tops, double bottoms, triples. Doesn't matter, just pick one. And you can enter when price begins moving in the expected direction. And set your profit targets at the median Bollinger Band. It's the moving average. Use that one. Some common pitfalls you want to avoid. You do not want to fight a strong trend without confirmation, because you try shorting a runaway market, you're going to blow out your trading account. You don't want to ignore fundamental factors that might prevent mean reversion. You do not want to over leverage your positions. Remember, generally you're trading against the major trend. And make sure you adjust during high volatility periods, because you can be faked out a lot during these periods. It looks like it's going to go, and then it reverses on you. If you are an advanced trader, you can improve your approach. Combine multiple time frame analysis. If you see higher time frame rejections, you could trade those on lower time frames before that higher time frame confirms. You can incorporate volume analysis to confirm your reversals. For example, low volume into the highs and then high volume on reversals. That's something to watch out for. And so is the opposite. You may get excessive amount of volume into highs. That's another sign that mean reversion could be just around the corner. And you can use option strategies to limit your downside risk when you're doing a mean reversion trade. And if that's something you want to consider, give Mike at netpicks.com an email. about strategies that you can use for this. Just remember that if you're going to be involved in mean reversion trading, you got to have patience, you got to have discipline, you always got to analyze that market. Just start with some paper trading, maintain some detailed trading journals, gradually increase your position size as you are demonstrating to yourself that you can be profitable with this. So some steps that you can take right now after this video. Just create a watch list of historically range-bound assets, for example. Set up charts with a Bollinger Band, an RSI, a moving average. Begin paper trading using that simple strategy we just talked about. Document each trade setup, the execution, the outcome, and just review your results after 20 trades before trading real capital. Now, range-bound markets are going to be easier. And then you're going to branch off into those strong trending markets that mean revert. When you can master mean reversion trading, you're going to give yourself a pretty powerful strategy that's going to capitalize on market inefficiencies while maintaining defined risk parameters. Let me know in the comments how this goes for you.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.